Good morning, everybody. What a beautiful day this is. This is September 14th. Mark Putrino is going to guide you to financial freedom today. Mark, how are you today, buddy?
Hey, I'm good. How are you?
Wonderful. So, hey, guys,
Just
a
reading
little
about.
extra, just so you know, this video I put in the chat is Sky News Australia, and it's about China. Just a little something that I thought you might be interested in as people that care about your lives.
I'm just looking at this here. China fires several executives. I mean, Goldman Sachs. I just said China. The company did not name the individuals. It's got to suck getting fired from a job where you're making $5 or $10 million a year.
Oh, yeah.
Man. All right, so let's go see what else is going on here. That's someone who swam 315 miles in the Hudson River. Pretty amazing. Um, Now, let's see. I'm thinking about a career change. I think I'm going to join the auto union or the auto workers union because 100 grand a year for working 4 days a week is pretty darn good, if you ask me. I
Absolutely.
mean, it's so funny. It's like, all right, well, we want to get paid for 40 hours, but we're only going to work 32. It's like what? Like, so we can't see the math there that you're going to be getting paid more. Um, I just think it's so.
It's an
I mean, I
overreach.
don't know. I'm not there, but it just seems like so. I mean, who gets a 43% raise, man?
You
And
can't.
then they get to take a day off. So I mean, I don't know. I just think it's kind of. It just sounds very, very entitled. I mean, I'm not there, and I don't know what's going on. Um, but anyway, it said yeah. So their demands are they want to go to up. I think it's 43%, given it though it is over a couple of years, but that's still a lot. All right, so here we go. The union's initial proposal was for 40% hike. I mean, that's a lot. You're making 100 grand, and now you're making 140 grand.
Yeah.
Um, and I don't know, can the companies afford it? I think the unions are kind of angry that they think their perception is they're going to lose out a lot of jobs to the electric vehicle. Um, when electric vehicles come along, I guess they don't need as many workers. But anyway, let's take a look at some of the auto stocks, see if it's affecting them. And what your name is saying, Mark. Yeah, it's just I don't know. I don't get it, man. I mean, I've worked hard all my life. It's like I've never had anyone
Every day,
do
7 days
that.
a week. I mean, that's just the way. But I like it though. I stay busy.
All right, so here's Ford had a pretty nasty reversal. Um,
Can I ask Sean a question? Sean, are you a long haul trucker or just a local trucker? I did that in the last part of my stint in the army, man. I loved it. Drove all over
take a
Europe.
look at some of these truckers. JBHT, Hunt. Hmm. That's some interesting action there yesterday. So you notice how well we got down to the level that had been resistance, right? So now we have not looked at this stock in a long time, but this is a perfect example of this whole concept of levels, right? Um, Support back here. Actually, I mean, you can even go back here. Resistance here becomes support here, but resistance here becomes support here. So we haven't looked at this stock, but sure enough, it got down to, I don't even remember the last time we looked at this thing. It's probably a couple weeks ago.
Yeah, it's been a while.
But sure enough, we get down to here, and what happens? We get this rebound. Let's see if there's news there. JB Hunt shares up 3.7%. That's yesterday. ZTO Express earnings estimates, top estimates. All right. Yeah, so there doesn't really see well. The trucking company's president said customers are cautiously optimistic about the end of the year. So maybe that's the catalyst that made these buyers become more aggressive. Because as you can see, this is a very big move for this stock. It actually even got up to about 193.
Can I ask you a
And
question?
if you look back, you don't really see other moves like this. So is it that news? Well, maybe it's a combination of both. Maybe it's you got these remorseful sellers trying to buy their shares back, and that news hits the tape, and that makes them just get more aggressive. It makes them start to aggressively outbid each other. But perfect example of how a resistance level can turn into a support level. So this was back in April, and now we are in September.
Could it be, Mark, the UPS drivers where they've gotten this big giant amount of money for their salaries that now the cost of shipping goods is going to cost so much more to cover all those salaries? Could it be that it's going to filter into this because people have to ship?
Yeah, I mean, I don't really know. Probably sounds like it. I think now it's like, all right, well, hey, the Teamsters just got a good deal, so now we're going to go out and try to get a good deal for ourselves.
Yeah.
All right, let me tell you a little secret here about how Wall Street works. Not that it's a secret, but if you're managing a fund, you are judged against a benchmark, right? The most common benchmark is the S&P 500. But let's just say, hypothetically, you are judged. You're someone and you manage small cap. You manage small cap, and your benchmark is the Russell 2000. So let's see. It's IWM. So this is the Russell 2000. So you're compared to this, right? If you get better performance, in other words, if this thing is up 10% and you're up 12% over a given time period, you're doing a good job. If you're up 8%, you're not doing a good job. So one of the secrets, or one of the, I don't know if it's a secret, but something that happens frequently amongst managers that are pretty savvy, frankly, is they take their portfolio and they make it look a lot like this. Now, there's 2,000 stocks in here, and most managers aren't going to be managing that much. I mean, a mutual fund might have maybe 70 or 80 companies in it. So no one's going to have close to two. No one manages 2,000 stocks. So, oh, look at that. We got the question mark there, and sure enough, we found some part. So what you do is you make your portfolio look kind of like this. So just say the Russell 2000 is 20% healthcare and 10% financials. Well, you make your portfolio 20% healthcare, 10% financials. So what you're doing is you're starting a quasi-index fund. It's like a quasi fund that is just like this ETF here tracks the Russell 2000. You're putting together a portfolio that's going to closely track the Russell 2000. All right. So what would happen? You would have the exact same performance as your benchmark. So you're, I mean, neither good nor bad at first glance. You're, I guess, right on the line. Now, an IPO like this comes along, like this ARM IPO, and these things come along maybe 3 or 4 times a year, where they know it's going to open at a higher price. It got priced at $51. So what they do is, what the Wall Street funds do, or I should say the brokers, is they go to like their best clients, meaning the people that have paid them the most commissions, and they have said, hey, do you want 20,000 shares of this ARM, or do you want 100,000 shares, depending on how big it is? Because they know it's going to open higher. So you're really just giving out free money. So, okay, listen, we'll take 100,000 shares of ARM. And then you call another broker and say, hey, listen, we got 100,000 shares of this ARM. I want you to sell it sell it today when it looks like it's really ripping higher. So you're getting the IPO, what we would call a hot IPO, because it's almost a guarantee that the thing is going to go up. And this is a way that the big brokerage firms reward their clients. So, is it illegal? I mean, probably not. Is it unethical? Probably. I don't think it's illegal, because you could say like, hey, we didn't know that the client was going to sell it, and they've been a really good client. They paid us $5 million a share in commissions, and I mean, they've given us a lot of help. So we think it makes sense for them to get some of these shares. So when you do have a strategy like this, you basically just track your benchmark, and then maybe 2 or 3 or 4 times a year, you get some really hot IPO, and right there is your alpha. And alpha is, does anybody know what the ARM symbol is going to be?
No.
And alpha is the percent that you beat your benchmark. Oh, here it is. So in other words, if your benchmark was up 10% and you're up 12%, you have 200 basis points of alpha. So in that case, you're doing a good job. So the key is that you don't try to hit grand slams, or you don't try to swing for the bleachers. You just be okay with, hitting signals. All right, so let's see here. So yeah, so that's kind of interesting. So I would say those are the two big stories this morning: is this auto union strike and this whole ARM IPO. Fuel prices are soaring. Remember, we're talking about oil getting to about 93. Oil futures. Whoops, wrong one. Yeah, I mean, people are really starting to talk about gas now. Yeah, look at this thing. This is continuing to climb because this is a time of year traditionally where gas prices go down, I believe, as we're coming out of the summer, and instead gas prices are going up.
Yes, sir.
So yeah, so here's oil, right? I mean, we got their big move, and then we got our classic flag pattern, and now we've had a couple of other big moves. So we're only a couple of dollars away, but this was resistance. This level was resistance back here. So remember, we tend to run into resistance at former peaks, and there is a reason for that. It's not just like a symbolic thing or a coincidence. It's that there's people who bought up here who regret their decision when the price goes lower, and they tell themselves, if this gets back to where I bought it, I'm going to sell so I can get out at break even. Right? So you get remorseful buyers trying to sell. This is why there's resistance at former peaks. And there will probably be resistance at this peak if we are at this level, if we get there once again. That doesn't mean it's going to eventually not move through it and keep moving higher. But if you're a trader and you're trading oil, and say you're right, man, I keep hearing that damn chirp. I don't know. Oh, you know what? It's probably coming from my garage. Just one of my smoke detectors. I guess the battery is low. All right. Anyway, so just say you're right. You buy it down here. Just say you buy it and you say, all right, well, you know what? 93 is my target. So say it gets to 93 and you sell and you close out your position. Do you take it off your radar screen or do you keep watching it? Well, you could keep watching it because if it looks like it's going to break the resistance, then you can jump back in. If it looks like it's going to roll over, you can get in on the short side. So just by definition, if your price target is an important price level, well, we know that things tend to make big moves when they get to important price levels. So you close out your position, but then you're nimble. I mean, in a perfect world, you're nimble. If it looks like it's going to keep moving up, well, you jump back in. If it looks like it's going to roll over, hey, you go in on the short side. There's nothing better than getting a trade two ways, right? Where you get it going on the one up and then you get it going down. And you can see down here, right? More like we get to resistance at a former peak, resistance here at a former peak. And then on the downside, we get support at former bottoms. Markets tend to run into support when they reach a former bottom. Markets go in peaks and valleys. They don't go in straight lines. So a valley is what we call a bottom. So there are people who sold down here, the oil's really collapsing and they're like, oh, this sucks. I got to get out. And then the price reverses. Well, a lot of the people who sold are like, damn, I shouldn't have sold. I'm going to buy my contracts back because remember, this is oil. If it gets back to my price, sure enough, you get back down here and you get these people that were remorseful sellers trying to buy their shares back, and you get support at the level that was support. Now, people take this for granted, but think about how big the oil market is. It's almost like incomprehensible. Yet somehow, with all these forces going on all around the world, these perfect price levels or these precise price levels come into play. And it's, people take it for granted. And a lot of people would argue it doesn't happen or it shouldn't happen. But sure enough, you see here that it does, right? I mean, I don't know what else to say. So when we want to figure out where our price targets are, we look at former resistance levels or we look at former support levels because they could become support or resistance again, or they could switch back and forth. Like for instance, here we had a support level, which switched into a resistance level. But if you were down here and we were coming up and you started thinking, oh, where can we find a target? Well, are we getting close to what was a former peak or a former bottom? Either way, there's a good chance there's going to be some kind of support there. I mean, sorry, in this case, resistance. Here you can see down here, right? Look at that. Just like kind of perfect. Well, actually not perfect, but all right. So anyway, so that's oil. All right, let's go see what the stock market did yesterday. Funds. All right, so SPY basically didn't do anything. It was like a very, very quiet day. It was basically unchanged. And we're trading up a little bit this morning. Not a tremendous amount. So here's where my ranges would be, or my levels if I was trading this. On the downside, 443.50, right? The level that was resistance. That became resistance again, and then it became support. And on the upside, I would be looking at 452 for some kind of a reversal. I have a hard time seeing the market just really move higher significantly, because I just think it's this interest rate environment is, it's just too big of a thing to overcome. And the market has like price cuts marked in, price cuts baked into it. And I mean, sorry, I'm sorry, I misspoke. Interest rate cuts, and I just don't see it. So here is our 10-year yield. And what's kind of interesting is here, again, this is another thing. How is it possible that interest rates are the same now as they were back in October of last year, if you consider how big the worldwide economy is? Now, this is the interest rate. Interest rates are inverse to bonds. So now let's just look at this. This would be the bond. And what is it doing? It's testing support. It got to support and it bounced. So when the bond bounces, the interest rates go lower. You can see the inverse scale over here. So basically what I'm saying is that the 10-year bond is testing important support right now. If this support breaks, that's going to cause a rapid move higher. And once we get to about 4.35, 4.4, that's going to, I think, be taken as really bearish by the market, because those will be the highest rates that we've had since 2008. And look at that, going all the way back there. Look at where we hit resistance. So even in the bond market, you get market memory. I mean, this is 15 years ago, and we hit that resistance. We sold off. Now remember, if this was inverse, this would be the bond. So I guess we'll invert it. So we got to support, and then we rallied. And then if we move up to the present day, 15 years later, the same price level, 4.3, becomes important. Pretty amazing stuff, right?
Absolutely.
All right, let's see what our technology sector looks like.
Should look at Dollar Tree and Dollar General when you get a chance.
All right. So tech looks like it's pretty range bound. Dollar General, we talked about as a possible trade. Let's see what happened over there. All right. Now here is a good example of what is a good strategy. Don't get into the trade until a reversal starts. So now I had talked about this as a potential buy because we were extremely oversold and we had reached a former support level. We know that things that are oversold that get to support tend to rally. Now, that was the thought here. So that was what we call the setup. All right, we're oversold. We're at a former support level. There's a good chance it bounces. But I said, all right, well, let's wait for it to close above this level here before we take a position. Crossing back over here would have been the trigger. So as you can see, the trade got set up, but it never got triggered, and it went the other way. So we were wrong, but we wouldn't have lost any money because, or I should say I was wrong, but I wouldn't have lost any money because the trade was never triggered. So it would have been on my watch list, but now it would be off my watch list. I mean, maybe now you can consider it on the short side. Very similar to what happened with Eli Lilly on the other side, right? So we talked about this potentially being a short trade. we talked about this potentially being a short trade because I just think it got overbought and there's a lot of hype around these weight loss drugs. Now, what was the trigger here? Oh, if it got below this line, and it never did. So this is another trade that was set up, but it never got triggered. So if you wait for that trigger, the thing that, being set up is like when the starter says, on your mark, get ready, get set. The go is when you cross the whatever your trigger is. I mean, in this case, we're using a support level, but this is how you protect yourself. And I think that if you don't wait for a reversal, although it's I guess you could say it's an educated guess, but you're kind of just guessing that it's about to reverse. So just because something is down big and it's oversold doesn't mean that it can't keep going down. Or if something's up big and it's really overbought, doesn't mean it can't keep going up. Things can be overbought or oversold for a long period of time. So there's two examples right there where using a trigger would have prevented you from losing money if you were considering either one of those trades there. All right, so let's go look at our healthcare sector. So let's see here. Yeah, so this is kind of just not doing anything. I thought maybe this resistance would hold, but then again, we're only 50 cents above it, and it's $130 security. That's another lesson too, is you got to be careful with the scale, because sometimes things look bigger than they really are because of the scale. So this level here is 132.50, and it closed at 132.82. So it looks like a big move, but it's really only 30 cents, and it's $130 some odd dollar security. So that's like basically nothing, 20 basis points. Actually, sorry, 2 basis points, which is nothing. Okay, then we got to go look at our financial sector. And now this looks a little on the weak side to me here. And I will tell you why. Because notice how this is support and this became resistance. And yesterday, or I should say 2 days ago, boy, it's so nice up here, man. It's like fall weather. It's no humidity. It's like 60 degrees, 70 degrees.
Yeah, the heat's starting to put down here too. It's getting nice.
Yeah, Clifford doesn't do well in the heat anymore. So when it's a nice cool day like today, he does pretty well. All right, so anyway, so notice how 2 days ago, we got all the way up to here. And then the sellers, by the end of the day, pushed it all the way back. So we opened here. Looks like the buyers pushed it all the way up to here, but the sellers pushed it back below this important resistance level. Same thing happened yesterday. We got up there. This is where we opened, but by the close, we pushed back below it. So a big reversal like this, and then closing well below its open like this, that you could argue that that's negative action. It could be the first stages that it's going to fail. Or that's the term for when something doesn't get through resistance. It's going to fail at this resistance, just like it did back here. See, we look at these trades. So we got this, and we got this, right? So both times it looked like the shares were making a push above this level, but both times the sellers ended up, by the end of the day, overpowering the buyers and pushing the price lower. So that's what happened 2 days ago. That's what happened yesterday. So this morning we're basically 34.78, which is literally 3 cents above where this line is. So this is going to be important to look at or to watch. And what I think is going to tell us what's going to happen here is we take a look over at the banking sector. Yeah, so now look at this, right? So it looked like this support was holding. So this is KBE. This is our banking industry. We have sectors, and then we have industries underneath them. So there's 11 sectors, and I don't know how many industries there are. Probably a lot, but then there's sub industries. It all kind of just goes down like a little inverse tree. But this level was resistance, 38, and it became support. Now, yesterday, it looked like we were rallying off the support. We got all the way up to here, but we came all the way back and closed just above 38. So far, healthcare and tech look kind of neutral to me. I think that the financials are going to be in the driver's seat over the next couple of days. The market is the sum of its parts, right? And different sectors have leadership at different times. And a big part of getting a feel for which way the broader market is going to go is to know what to look at. So this isn't like really rocket science here. It's that we look at, well, I'll bring it up again. So if we look at tech, which is the biggest sector, but it's not always in charge. I mean, this looks pretty neutral. Or, I mean, you could even argue that it's still downtrending, but for the past 5 days, it's kind of gone sideways. I would think that the path of least resistance is lower. But all right, so let's just say this looks neutral to somewhat bearish. Then we got our healthcare sector, which looks pretty neutral. Now we're kind of just been flat for the last couple days here, last 3 days. But the financials are looking a little weak based on the fact that they look like they might be failing at this resistance. So this is why I think the main thing to watch is this, because healthcare is neutral, so probably not going to get too much action out of there. Tech is somewhat neutral to somewhat bearish, I would say. So probably not going to get anything too significant out of that. But you could end up getting a significant move here in the financials, and then that could end up bringing down the broader markets. So now if we want to look within the financials let's take a look to see if there are I'm having a hard time talking. See if there are some companies that dominate it, or what are the biggest financials, or what are the biggest stocks in the financial sector, because these will have the biggest impact on the broader sector. So Berkshire Hathaway is 13.8%. And that's a big sector. I mean, that's big. There's probably, I don't know, 50, 60 stocks in this sector. And you got one is 13%, and then JP Morgan is 9%. And then Visa, wow, Visa's really gotten big. So these three companies are 30% of a 50 or 60 company index. So, all right, so let's look at Berkshire, BRK.B.
Guys, we're not going to be on tomorrow. Mark's got some business to take care of, so we will be back Monday.
Yeah, I've got to drive up to visit my daughter at college, help her out with some stuff. All right, so this is kind of interesting here. So Berkshire looks pretty strong, even though the rest of the sector arguably looks a little weak, but it is overbought. I mean, if this reverses here, that would be the catalyst. So what's the second biggest? It's JP Morgan. And this kind of just reversed off of here. All right, so where is this potential weakness coming from? Visa looks okay too. Although, look where it hit resistance, right? Same place as back here. Very interesting. So there's got to be some real weakness in here that we're missing. Bank of America. Let's take a look at that. And then Wells Fargo. All right, yeah. So Bank of America is below what's probably going to be resistance. And Wells Fargo, which is my bank. Yeah. Well, I don't know. I guess you could argue that Berkshire is overstretched. But it depends on how far in depth you want to go into this. Some people just look at the ETFs. Some people look at all the stuff that are in the ETF. But it's a good way to get trading ideas. Like if you see a sector that looks like it might break down or might break out, well, when you look at a sector, all you're really doing is looking at the average of all the stocks that are within the sector. So there's just by definition, there's going to be stocks that look like they're going to go down, and there's stocks that look like they're going to go up more. So my guess is maybe these are some of the smaller banks are probably looking pretty weak. PNC. Yeah, I mean, something like this is prime for a reversal, I would think, because we had this really big move higher, and then we opened here yesterday, but then we closed back below the prior day's close. So that could be a little bit of a trend reversal there. All right. Anyway, back to our top stories. The ARM IPO. You can have some high humidity. Yeah, dude, it's really nice. I mean, the leaves are starting to change. This time of year is cool, but then you know what sucks is when they have the daylight savings time, and it's like pitch black at like 4 o'clock. It's you think it's 10 o'clock at night, and you look at the clock, and it's like 5:30. All right, ooh, Amazon. What do we got going on here? All right, well, I would pay attention to this because look at where it is right now. Right up. I'm going to go with that closing price. So we're right there. So let's see. So this is August 16th of last year. Closing price 144.78. Yesterday was 144.85. And let's look at our momentum. Now, if you look at this, right, this doesn't really show being overbought, but this is measuring back 14 time periods. So if we go, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it's measuring from here to here. It doesn't really have this like spike in it. So I would say that this is overbought on a short-term basis. Overbought at resistance, probably a good chance it reverses. Now, what would be a good price to wait for, like we talked about for the trigger? And I would probably go with this. See the high there and the high there? Let me put that in here. So those are our two intraday highs. But I would probably, I'd probably go with that, 143, which is 143.25, which was the closing price here. And it was 143 was the high trade there. So I would say if this thing got below 143, that's where I would consider taking it in on the short side or taking a position on the short side. But again, well, like I just talked about, sometimes when things get to important levels, they make a big move one way or the other. So we could get a breakout. Now, it might be like, all right, well, it might go up, it might go down. Well, yeah, that's what we look for. I highly doubt it'll spend a significant period of time trading right around here. Because as we know, when things get to these important price levels, they tend to make rapid moves off of them. Like, look at back here. And this thing's got a bunch of gaps on it. But yeah, so we get to important support here, and we're there for 4 days, and then we make a big move higher. Here you get to resistance for 1 day. Here it's 3 days. Here we kind of hung out for a while, but this is unusual. So that's what I would be looking at. That's what I'd be looking at there. All right, let's see. What have we not looked at? Consumer discretionary stocks. XLY. Those cannabis stocks all reversed. All right, so yeah, so this is at resistance, and this makes sense because Amazon is, I think, the biggest company in this sector, and then Tesla is the other biggest one. And this is kind of getting into a resistance zone up here. So now if we look at this particular sector, the consumer discretionary sector, we can see that this thing is dominated by Amazon and Tesla. So Tesla is 20%, Amazon is 25%. So these two companies are 45% of this sector. And let's see, just for the heck of it, how many companies are in this sector? Top 10. So this is the top 10 holdings. All right, I guess it doesn't. Number of holdings, 53. So you got 53 stocks in this sector, and you got two of them are 45% of it. So what does that mean? Well, if you're trading Home Depot or Lowe's or McDonald's, it's probably going to be affected in some way, shape, or form by what goes on in the action here. because the way these ETFs trade, they kind of put things. There's a tendency for them to kind of make things kind of like go in the same way, right? So an ETF has what we call a net asset value, and that would be right here. You know what stocks are in the ETF, you know how many shares are in the ETF, and you know what the price is. So it's possible to come up with a exact value of what the ETF should be trading for to within a cent. Now, suppose the ETF gets below that in the open market. There's a lot of aggressive selling of the ETF. Well, then the market makers are going to buy the ETF and they're going to start shorting all of the stocks that are in the ETF. Now, in the ETF market making world, a market maker can use the ETF to cover the shorts, whereas a regular investor, you have to cover the short with the exact same thing that you short it. But if in the ETF world, it's different. So, but anyway, if the ETF gets really pounded down and the market maker starts shorting everything, shorting is selling. So that's going to put downward pressure on all of these things. Same is true on the upside. If the ETF gets above net asset value in the market, then what's going to happen is the market makers are going to short the ETF, and then they're going to go out and buy all the stocks that are in the ETF. So that's going to put upward pressure on every stock in the ETF. These things are pretty closely correlated. I mean, things used to be correlated, but not like they are now because of the whole ETF world. So people ask me sometimes, does the ETF move the stock or the stock move the ETF? And the answer is, it really depends where the money is coming into first. See, like look at the Tesla chart. I mean, sorry, look at the Home Depot chart, and then look at the Tesla chart. I mean, there's not a perfect similarity, but actually, let's do it from year to date. So you notice how we got this kind of thing going on here, and then if we go to Home Depot, it's not perfect, but you could see that there's some kind of correlation there. Well, let's look at Amazon. Not perfect, but it's close enough that it's worth paying attention to. So here's Amazon. There's Home Depot. What's next? Lowe's, McDonald's. So this will probably look somewhat like Home Depot. Yeah, you see? So notice we peaked and then we sold off and then we peaked. If you look at Home Depot, it's kind of the same thing. You got the peak. This was where that peak was here, and then we peaked and we sold off. So just something to keep in mind. Now, a lot of it obviously depends on your strategy, and you might not want to focus on too many things, but it is just something to keep in mind. If you have a sector that's dominated like this by two stocks, it's going to influence. These two stocks are going to have some kind of influence on the rest of these. I mean, these will have an influence on these, but it's not going to be. It's probably going to be untradeable, or it's going to be too small to even notice. If you look at the tech sector, this is another sector that's dominated by two stocks, and you can guess what they are. Apple and Microsoft make up like 45% of this benchmark, and then Nvidia. So you get three companies are 50% of. Try to download the holdings, and it's not working. All right. Well, anyway, take my word for it. I think there's like 50. Actually, we can get it on the fact sheet. All right. So remember, you got three companies, and there's 50%, and there are 65 companies in this sector. So the remaining 62 have the same importance as these three. And that's because these things are calculated on market value. So there is some kind of debate going on. I don't know if you recall, but the Russell 1000 they got finagled it because it was so dominated. But I don't know. I mean, it's just the way these things are calculated. KO is a potential trade. Was that Coke? Well,
yeah, I believe Coke is KO. Yeah.
No, Coke. The symbol came from knockout because boxing was so big back in when this company went public. I think boxing was like the biggest sport in the country. So what's going on here? Should you invest in this? I mean, I don't know, dude. This looks a little weak to me. I mean, right? Because we're kind of getting below, we're below there, not significantly, but I mean, I my guess is that this thing continues to trend lower. It just looks kind of weak here. But you could think about your trigger. All right, well, if it gets back above 58, say 50, well, that'll be my signal to jump in because maybe it's going to continue to go. Or if it gets below this low here, which is 58, and we know there's going to be people buying at 58 because it's a round level. Maybe so if you get below 58, that's your trigger to take some kind of a short position here. But just, I mean, to me, it looks like it's going to go lower. Let's see, Pepsi. Oh, look at that. It looks very different than Pepsi. Coke is trending lower. Pepsi's trending higher. Yeah, I mean, I don't know what's going on here, but well, I mean, going back to Coke looks to me like it's going to go lower. All right, so the PPI is out. Let's see if that had any effect on the market. And the answer is not really. All right, so let's see what it was. Let's see PPI. Delta joins other airlines in cutting profit estimates on higher costs. Yeah, I mean, that makes sense. Oil goes up and it's going to. Oh, look at that. That's what I said. Oh, no, I said 93. All right. August wholesale inflation rises 0.7% hotter than expected. God, I hate these buzzwords. It's like, oh, it's a hot print. All of a sudden, the last 3 months, everyone's like, oh, it's hot. All right, so let's see. The estimate was for a 0.4% increase. So this probably could have some kind of effect of. I mean, I would think that this is another bearish thing for the market, just like the CPI was yesterday. I mean, it's not a huge thing, but it's not below, and so it tells us that despite the narrative going on, there's still inflation is it's out there, and I guess you could even argue it's coming back.
Sticky.
And yeah, I mean, it just makes sense because there's the government is just throwing out so much money, and more money in an economy is inflationary. Just think about it. If you got a closed economy and you have 100 goods and $100, well, those goods are eventually going to end up costing $100. If the government comes along and just throws more money in there, and now there's $200 in the economy, well, those goods are eventually going to end up costing $200. So you have the same amount of goods, but you have more money. But look at this. I mean, this is a pretty. If you look at this kind of like from a bit of a longer term, well, not that long, year and a half, you could kind of see like some turning action down here, right? You could see the. Let's see, what can we do here? We'll go with the curve. You could kind of see like this trend now is really kind of changing, or has changed. So we were kind of trending lower. So this is June of last year, trending lower, trending lower, trending lower. Then it looks like right around June of this year is when we really kind of started to reverse and started to trend higher. So this particular index has everything in it. Well, the main thing is oil, but I think it's got like 30 different things. Let me actually just see if we can find this. See, or the components. Oh, okay. So it's only 19, but it's kind of cool. I think looking at this stuff is kind of cool. So aluminum, cocoa, coffee, copper, corn, cotton, crude oil, gold, heating oil, lean hogs, live cattle, natural gas, nickel, orange juice, gasoline, silver, soybeans, sugar, and wheat. So there you go. There's your commodities. Live cattle. Let's take a look at what live cattle looks like. Put me in the mood for a steak. The ETF is DBC. That's the one that we were following, which doesn't track this commodities index. It tracks a different commodities index, but it's it's pretty much the same. So if inflation does keep going higher, something you can consider is buying this here, DBC, which is an ETF that is designed to track a benchmark. So we were just looking at the CRB commodity benchmark. This tracks the Invesco Deutsche Bank or Invesco DB commodity index. So very similar. There's probably an ETF that tracks the CRB. Well, actually, let's see if we can find it. CRB ETF.
DBA looks kind of interesting as well.
List of commodity ETFs. CRB commodity gets ETF tracking.
Sorry, I was looking at it on a monthly chart. Never mind.
GCC. Yeah, this one. Now it's coming back to me. This one was run by Goldman Sachs, I think. GCC. Wisdom Tree Enhanced Continuous Commodity Index Fund. Yeah. Now you see this one's not as popular. See how it trades? It only trades like 38,000 shares on an average day. Now, why would there be this gap down there? That's kind of interesting. So I think you're better off with DBC. I guess that's when, I guess. So see here. So there's just a lot more volume in this. So there are similarities with GGC, but I would say GCC. So yeah, I don't know what this gap was back here. I mean, it probably some kind of rebalancing or something. But anyway, I think your better bet is to go with DBC because there's more liquidity in it. And look at this. This looks like it could be on the verge of breaking out as well. All right. Let's see what else we got. Maybe let's go take a look. Oh, you see this, that the Georgia governor is declaring a state of an emergency over inflation?
Huh?
That's kind of weird. I didn't know you could do that.
I didn't know you could do that either.
Declaring a state of emergency, because state of emergencies, they have to do with spending and so forth. Probably just like trying to make some political noise. August experienced the biggest monthly inflation increase in 14 months. Gas prices are averaging 3.56. So I wonder what this state of emergency gives the government the power to do. And I really don't know. Georgia gas tax pause starts Wednesday. All right. Well, I guess that's good for people that live in Georgia. New concerns on it. Yeah, I mean, I don't know what it's like where you guys are, but if you think about it, the biggest selling automobile is the freaking pickup truck, the Ford F-150. I go into the parking lot over at the grocery store and it's like, all you see is SUVs. It's like 80% of the cars around here are SUVs. Yeah, so I don't know. I'll have to look into that a little bit more. All right, everyone. I think I'm going to get going. So just remember I guess the two big stories to pay attention to are the auto strike. I mean, that's if they don't come up with a deal by I think tonight at midnight, the auto workers are going to go on strike. So that's probably going to be short-term bearish, I would think, in the market, just because of the uncertainty of how long it's going to go on for. And then what's the other story is this ARM IPO, which I believe is going to start trading today. So it was priced at 51, and usually it's probably still a little bit too early here. ARM stock. Usually the brokers will start posting bids. If there's a lot of demand, it won't open at 9:30. They'll hold it off, and but you'll start to see the bids pop in as we get closer to where the market is where the market's going to open. So it got priced at 51. So if you're some institution and you got 10,000 shares on the IPO, well, you got it at $51. If it opens at 75, you can just go ahead and sell those, and it's like free money.
Thanks, guys, for joining us today. Y'all have a wonderful day and enjoy the market.
Okay, everyone. I will.